Tata Nifty India Tourism Index Fund. Will investing in this fund get you the returns that will help you accumulate wealth in the long run? Let us find out through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decisions to reach your financial goals in a more faster and smarter way. So before analyzing this one, let us first understand what is Tata Nifty India Tourism Index Fund is about. So as an NFO, it starts from 8 July 2024 and is open until 19 July 2024. And some of its key features are it is an open-ended fund type, and it has Nifty India Tourism TRI as its benchmark, and also it belongs to the category of equity thematic fund. And this fund has Mr. Kapil Menon as its fund manager, and the minimum application amount needed for this fund to start investing in it is 5,000 rupees, and according to the riskometer, it has very high risk in it. So now let's move on to the investment objective. So the primary investment objective of this fund is to provide investors with returns that before expenses closely respond to the total returns of the securities as represented by the underlying index, subject to the tracking error. As we have now understood some basic details about the Tata Nifty India Tourism Index Fund, let us now understand a little bit more about the Nifty India Tourism Index Fund. So this index aims to track the performance of stocks from the Nifty 500 index, which represents the travel and tourism theme. And also the largest 30 stocks from eligible basic industries are selected based on 6-month average free float market capitalization. So the weight of each stock in this index is based on its free float market capitalization. And also you can use this index for a variety of purposes such as benchmarking fund portfolios, launching of index funds, ETFs and other structured products. And now let's take a look at the top 10 holdings under the Nifty India Tourism Index. So the top 10 holdings are Interglobe Aviation Limited, Indian Hotels Co. Limited, Indian Railway Catering and Tourism, GMR Airports Infrastructure Limited, Jubilant Foodworks Limited, EIH Limited, Lemon Tree Hotels Limited, Sapphire Foods India Limited, Devyani International Limited and Westlife Foodworld Limited. So the highest weightage is given to Interglobe Aviation Limited by 20.01% and the lowest weightage is given to Westlife Foodworld Limited by giving a weightage of 2.58%. So now let's move on to the sector represented under this index. So the sectors represented under this index are consumer services and consumer durables, and the highest weightage is given to consumer services by 66.98% and the lowest weightage is given to consumer durables by a weightage of 3.29%. As of take a quick review of the returns as on 31st May 2024 of this index. So yearly it has given a return of 15.68% and in 1 year it has given a return of 41.98% and in 5 years it has given a return of 19.49%, and also since inception it has given a return of 12.19% according to the graph represented here. So you can see in long term it has performed exceptionally well. So now to analyze whether Tata Nifty India Tourism Index Fund will give you the returns you dream of, or will it be a worthy investment to your investment portfolio or not, you need to first understand what are the pros and cons of investing in a fund like this. So first we are going to explore the pros of investing in this fund. So first of all, it invests in a diversified portfolio that are likely to deliver long-term growth with minimal volatility, and it also invests across various capitalization because the stocks it invests has been computed by using free float capitalization method. And also if you compare this fund with an actively managed fund, the returns you get from this fund are relatively stable with less volatility. And also if you are an ultra conservative investor who's looking to add passive investments to their core in equity portfolio, this might be a suitable fund option for them. And as a passively managed fund, this is free from fund manager bias. So as it is managed passively, it is expected to have lower expense ratio than an actively managed mutual fund schemes. So these are some of the pros of investing in this fund which you need to carefully consider before choosing to invest in this fund. So next we are going to take a look at the cons of investing in this fund, because it's equally important to understand the pros as well as the cons, because the cons reveals the potential risk you might be undertaking by investing in this fund. So as this fund invests in equities, it is not suitable for short term investments, because as we know, in short term market is highly unpredictable. So if you are a short term investor who's investing just to achieve your short term financial goals, this fund might not be suitable. But if you want to invest in a long term period, then you might consider this fund. But for a short term, it's a big no. You need to avoid investing in this fund in a short term period. Also, as an index fund, this may underperform its index due to certain factors. There is not a guarantee that it will definitely perfectly replicate the returns from the index, because it can also underperform due to certain factors. It only tries to replicate the returns from the index. It might not be able to beat the index. It can only be able to replicate the index to a certain level. So this fund will not be able to deliver you with market beating return. And also, based on the market outlook, this fund cannot change its allocation dynamically, because as it only tries to follow the index allocation dynamically based on the market, based on how the market is playing. Because if you look at a actively managed fund, the fund manager will be able to play according to the market's advantage. But here you will not be able to do that. Also, as an index fund, they don't do any analysis on the underlying stocks and check the soundness of the company in which they are going to invest. They are only going to see how the index is performing in overall, but they will not look deeper into each of the stocks and how much it's going to impact. They are only going to see how the index is performing in an overall view rather than the stocks, individual stocks it has. So if you compare it with an active fund, they are able to take a calculated risk by analyzing all stocks and choosing the best, instead of just blindly having an index overall performance. Because in active funds, they will be able to choose and analyze individual stocks. Here, they will not be able to do that. So the major drawback of index fund investment is tracking error, since it may not perfectly track its index also. And as an index fund, it is not flexible and will not be able to take any course corrective measures during the market crash, because just as much how you cannot play according to the market's advantage, it cannot also take any course corrective measures due to market crash. So whatever the index does, it follows. So as it only tries to replicate the index, it will not be able to change or be flexible in that regard. So these are some of the cons of investing in this fund which you need to carefully consider before choosing to invest in this fund. So what is the final takeaway? Should we invest in Tata Nifty India Tourism Index Fund or not? Whether it's worthy investment option or not. As we can see, this fund might be a suitable option for an ultra conservative investor who's not willing to invest in an actively managed fund. But even then, there are similar index funds out there in the market that have a lower expense ratio and a lower tracking error compared to this one. Also, if you are willing to take more risk, a little bit more risk, then an actively managed fund have potential to deliver higher returns than this fund, which you can also consider. So if you are expecting dynamic fund management and are looking for investments that can beat the market, then you should definitely avoid this fund, because none of that will be available in this fund, because it will only be able to follow the index and it will only be able to replicate the returns the index give, but not able to beat the index itself. So if you're expecting that from this fund, this is not a suitable investment for you and you should definitely avoid this fund. And lastly, whether investing in this fund should be decided based on what kind of an investor you are. Should be based on what kind of an investor you are. So it completely boils down to your personal preferences and your risk tolerance. If you want to know whether this fund will be suitable for you or not, or what kind of fund will be suitable to your investment portfolio to achieve your financial goals in a better, more faster way, then you can definitely consult with a professional financial planner who will be able to suggest better fund options according to your personal needs, according to your investment preference, and personalize a financial plan that's best suited to your needs. So you can definitely consider that involving a financial planner, because in the long run it will definitely be a helpful and wise move for you. If you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, We also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.